Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Kevin Collins, CEO of CharliAI, as well as Hilary Wandall, Chief Ethics and Compliance Officer at Dun Bradstreet. We're here to discuss how AI can streamline compliance processes and allow compliance professionals to work on more complex issues. However, the implementation of this emerging technology needs to be done in a certain way. It is great to have the both of you with us. Welcome to Trade Talks. And Kevin, I'm going to kick it off with you. There's been a lot of hype around AI and the productivity benefits, but how does this translate into ROI when you think about it through the financial services lens?
The hype is actually distracted from a lot of the work that's happening in other AI realms that can address the governance compliance requirements within financial services. That needs to take and shift away from these large language models that you might find on the consumer side of the world and shift to more technology that's specialty trained on financial services, understands the financial documents, understands the regulatory markets, and can meet those.
Yeah, and Hilary, that really is one of the challenges because financial services is such a heavily regulated industry, and these technologies emerge quicker than the law and the regulatory frameworks evolve.
Yes, and it's so important that companies have a good, responsible AI approach. We think about it often as a framework-based approach, thinking about what are the core things that need to be evaluated when you're considering a new model. Every new model, as you said, they're coming out very quickly. You need to be thinking about the model, whether you can actually use that model effectively within a particular AI system. Not every, as Kevin said, not every model is going to work for every AI system and every potential use case. You need to be thinking about the data. You need to be thinking about how you can be transparent around it. And so there's a core set of governance components that need to be built in place.
Yeah, they certainly do. And Kevin, you brought up a good point about not necessarily implement the technology unless there's a problem that you're solving or providing a specific service where it makes sense for your clients. So when you think about investment and equity research, that model has been under pressure for a while to innovate and market and scale the business. Do you think AI is a silver bullet here?
Yes. So if I go and be biased, I am biased. AI is definitely going to have massive gains if applied properly. You do have to apply it properly. If you look at the equity research side of it, a lot of the time for a lot of these analysts is digging up through endless pieces of data and documents. So AI can actually accelerate that in order to give them massive returns in advance. But again, you have to use the right AI and the right models and the right techniques.
Yeah.
We do not train our models using general purpose data from the internet. We train it to be financial experts.
Yeah, well, I mean, it makes a lot of sense. I came from the sell side, so I understand, the equity research model well. You can have, let's call it 50 analysts reporting on Apple, and they're updating their models all at the same time when earnings comes out. But if you could extrapolate those nuggets, because a lot of the efficiencies have been exercised through AI, that's when you really start to get some interesting research and other ideas to report to the street.
100%, yes.
Yeah. From an implementation perspective, Hilary, back to the governance point, why is that key? And then can you use existing governance frameworks to help accelerate that?
So governance is key because, as we talked about already, it's coming so quickly, and without good governance, you can inadvertently end up with a big mess on your hands. So governance helps to prevent that. But there's so much that we can leverage already. I think in the experiences many of us have had from a compliance and ethics perspective, as well as from a privacy perspective, a lot of privacy professionals are moving into the AI space because they've learned to think about the data. What data is relevant to the use case, the outcome that we're looking for? What technology is going to actually enable us to get there? And how do we look at the risks associated with that technology? How do we secure it properly? How do we think about the data and the potential misuse of that data? Do we have the rights to use that data effectively? So the governance that we've learned around privacy, the governance we've learned around compliance and ethics programs, making sure you're designing good policies as the basis for your decision making, making sure you can apply those effectively through a risk-based lens, and making sure that as you are engaging third parties to support you, it's flowing through there properly.
Yeah, because it comes back to data in, data out, and how, because data begets data, and we're collecting all of it. What does it look like at the end of the day when it's been cleaned, scrubbed, structured, so that it does become an effective tool, whether it's internal to the enterprise or for client products. I mean, it is, to your point, advancing quickly. So Kevin, with that in mind, how can AI technology deal with hallucinations and accuracy problems in what's a really tightly regulated and complex world of finance? There's really not much margin for error.
Hilary mentioned relevancy, and it really is the relevancy of information. We avoid, for example, training our models with our customer data. Customers like their data, but it can really pollute the models, and they can expose information. So if we go back to the regulations, there's GDPR, there's PII, there's a lot of regulations that actually have a lot of structure that we can apply within AI. So there's new techniques out there that we've been doing for the last 5 years around agentic flows. Now, agentic flows are really, how do you mimic a human in processing data through a workflow? Humans have to do that in order to be compliant. The AI follows the same process to be compliant. And that means it needs to know when and how to use the data. Just don't stuff it into a big model and expect good outcomes.
Does it remove the human entirely from the analysis process then?
Definitely not. We do not believe, we believe in augmentation.
Okay.
So the AI is there to augment the human in their work stream, not to replace the human, and also to have a good interaction with a human.
Yeah.
So it shouldn't be just the human in front of a chatbot. It should be the AI interacting with a human to give them feedback, to show the reasoning, and allow the human to make critical decisions.
Yeah, well, I mean, it's also not at the point yet where you don't have editorial control over it either. I mean, there are some data that comes back where it's not relevant to either the question you answered, or it's using data from a different time period relevant to what you put in there. So there still is work to do.
Definitely, 100%.
Yeah. When you think about the ethical and responsible use of AI in data at Dun Bradstreet, what are some best practices? Of course, you don't want to pigeonhole yourself into a regulation, you don't want to stifle innovation. However, that's a fine balance.
It is a fine balance because the law and the legal and regulatory environment is changing around us daily. In fact, it was just a couple of weeks ago that California actually signed into law more than a dozen new bills related to AI in one way, shape, or form, different types of requirements, one of which I think it was the first state to actually regulate the output of an AI system to the extent that it's personal information, so an amendment to the CCPA there. But how do we think about generally applying existing frameworks and how to think about that through the lens of what's to come? One of the things that I have found over the years and we've applied in our business at Dun & Bradstreet is that the laws and regulations are constantly changing, and so you don't want to get too tightly bound to one prescriptive set of requirements in one law or regulation, but look at what are those core principles. And so we talked about a few of them already. I think risk management, looking at things through a risk lens and what are the key risks. So risks are associated with the kinds of data. And is that data actually governed by, well, is it personal data, but is it otherwise governed by some other contractual relationship or governed by some other law? And does that bring along with it additional requirements when you're putting it into a model, when you're actually using multiple models and putting it into a system? So making sure that you understand the risk first, and then depending on the nature of the AI system, you could have multiple different models working together with other technology components, and the complexity of those technologies working together can up your risk. So those things I like to start with, and then very importantly, drawing from existing ethical principles, it's thinking about how do we be transparent? So there's transparency and explainability, two really key principles from an ethical perspective in the context of AI, whether it's generative or otherwise. And the explainability piece goes to making sure people actually know how that model is getting to the answer. Oftentimes hallucinations are happening, but people don't have the explainability to show it got to the wrong answer this way, and here's how we need to tune it to get to a different answer. And then transparency, we've looked at, there's lots of disclosures all over, but transparency needs to be relevant to people contextually so that they actually know they're dealing with an AI. They know that when they've gotten a communication, it came from an AI. So those are a few.
I think it's a really good point to make, and some of the questions that I hear are, how can the EU develop an AI framework, a MiCA framework, a GDPR framework? The way that law evolves in the US is very different than that particular type of model. So it's not like, okay, let's just do what the EU is doing. There are, to your point earlier, existing laws on the book, and it evolves. It's not like you can just, okay, here's a brand new framework, here's a brand new technology, and here we go.
then that's one of the hardest things for everyone right now is we're dealing with evolving legislation on the privacy side in the US because we were a little slower to bring consumer privacy laws versus the rest of the world that has these real comprehensive laws. We now have 20 states that have a form of consumer privacy law, and we're getting AI laws on top of it. So I mentioned California. Colorado's done the same thing. Utah, in its own way, has done similar things. And what professionals like myself and Kevin and others inside of companies are needing to think about is how do we address these things coming together? What are the commonalities? What are the differences? And how do we not create too much complexity in how we innovate while staying compliant?
So Kevin, back to the technology for a moment here. Can AI really handle the emotional aspects that humans have or sway the market and impact investment decisions? Or is that even really the point of it?
Yes, the AI can handle it. Because if you actually look at the financial world, even look at the investment side of it, a lot of it has to do with sentiment versus just the raw numbers. And even with the AI from a responsible perspective, anybody that's had critical eye on the AI, the technology needs to allow them to switch perspectives.
Right.
You know, can I look at the fundamentals or do I look at the market sentiment? And they need to balance which way. Now, from a responsible perspective, we want to ensure that AI reasons and says, on the sentiment side, this is where I'm getting my information, and explaining exactly where the information is coming. On the fundamental side of it, this is where I'm getting the information. You as an analyst can now make a very well-informed judgment call, but the AI is good at actually showcasing sentiment. Again, if you go back to training the models the right way.
Right.
We have,
Yeah, because you have to ask yourself, how does it ensure that it's acting responsibly? You can't just say, you know, I'm running it through an AI model and perhaps we slipped with governance there and violated a regulation and so forth. How are you balancing that out, right?
So you balance it out with, and this is, again, moving away from the hype that you see in the consumer side of the world. We do not believe in that. In the world of finance and any specialty, even healthcare, you have explainable AI today. And it will explain and reason. And it will tell you the reasons I'm recommending this based on this, this, and this, and here's the sources I'm referring to. Not only the sources, it will go into a 700-page document and said on page 323, this is the information I'm pointing out. AI can do that today. That's not what you see on the consumer side of the fence, but on the commercial side of the fence for specialty companies, that's very doable with AI today.
Yeah,
very responsible.
It's interesting you're bringing up the consumer side of it because it really did become part of our everyday vernacular since November 2022 when, you know, there's sort of this expectation. Companies that I'm engaging with, are they offering some sort of Gen AI experience? You know, from the enterprise perspective internally, are we offering that kind of experience? So it's almost an expectation now because it's part, you know, of what's happening in consumer lives. So another thing you have to ask yourself, Hilary, in terms of going to market and how you're implementing it internally, are we, how are we balancing that ROI relative to the risk? Right? Are we spending enough time thinking about the risk first, whether it's data, cyber, you know, even the DevOps and SysOps side of it, or are we still learning?
I think we're still learning. I think across the board, people are learning. I think a lot of people were excited about what are the opportunities to do something really fast. And a lot of people tried and learned, well, maybe we're not getting exactly the answers we thought we were going to get with applying some of the generative AI tools as quickly as many people wanted to. But I think what the last year has shown us is there's been a lot of testing and learning with some of these new models that are being brought out, made available through open source or otherwise, is that if you apply the right kind of model and you tune it in the right way, it's not just about training, it's about tuning, and you actually are using high quality data that is appropriate for the problem you're trying to solve, that you actually can get much better answers than you could get any other way. And one of the things that's so exciting to me, especially as I think about like all the problems we're trying to solve for in the compliance space, and being at a data company where we have lots and lots of data, is how do you choose the right data sets that are going to give you an answer so much faster, but by applying a generative AI system on top of it, than you otherwise could have gotten weeks and weeks or months on end. You might not have ever gotten to that same level of insight. And that to me is super exciting.
Right. It also helps you to make more quantifiable decisions as well when you have that kind of data to support your analysis there. But you know, it's interesting, Kevin, it's not like AI is anything new to financial services, right?
It's not. I think the large language models that are popularized on the consumer side sort of painted the picture of the art of the possible. And then the reality check was, well, how do we apply it now? Because now you have hallucinations, accuracy, the responsible, all the risks associated with it. And Hilary pointed out there's new AI tech now. And that's what we're most excited about. That new AI tech, I joke that large language models are so last year.
Yeah,
well, I mean, this conversation can look very, very different. Let's call it 12 months out, even 3 to 5 years out. It could be from a regulatory perspective. The technology that's being used today perhaps could even be outdated because technology begets technology, right?
Yes.
So I mean, I think that's exciting. You know, removing all of like the what ifs that can go wrong. This could look very different in 3 years from now.
And it will. 100% it will look different next year.
Yeah, because you're building on more data, right? So you'll have another way to approach the next evolution of product or compliance software.
And last year it was large language models, and one of the things we're seeing is, well, maybe the small language models are actually more appropriate to solve certain problems. They require less computing and processing power, and they're less expensive. And so if you have a smaller problem you need to solve, a small language model may be the answer. And that's been a really interesting part of some of the more recent dialogue.
We love the baby models. And we're all about the baby models because it's about knowledge distillation between these baby models that are focused.
So what would be the distinction for the benefit of myself and the audience from a baby model to a large language model? What are some of the different examples of problems that you're looking to solve with one model or the other?
So a big one is just taking the ChatGPTs of the world that are really consumer focused, and they're putting a lot of general purpose consumer information into their big behemoth models. That takes a lot to train and a lot to infer from a compute capacity. The baby model could be very focused on finance, where it is now specialty trained to understand, because you even talked about tort law. You could get baby models that are focused on tort law. You could get baby models that are focused on equity research, baby models that are focused on broader market research. And those are far faster, more compute efficient, easy to continually train than this big behemoth model.
Right. And that goes back to what you were saying before, specializing within the compliance realm of using those smaller models rather than, you know, trying to, I guess, siphon out what you're getting from the large language models, but it's more tailored to specific, the compliance function.
Specific thing. I mean, even if we think about the potential future of regulation, when you're dealing with lots of different, like a novel regulatory problem, and lots of different laws and regulations all over the world that kind of layer on top of each other. So as we were chatting a little earlier about existing data protection regulation, now we have AI regulation, and we have cybersecurity regulation, and we have digital operational resilience regulation. You layer all this on top. Imagine the future where you need to find a particular set of common requirements across all. Why not use a small language model that's been trained on all the different regulations out there to go find your answer real fast and do your comparative analysis for you?
All right, well, we'll leave it at that on a positive note. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.